Hello and welcome to this edition of the Market Share. I'm Paul Gifford, Chief Investment Officer at First Source Bank. Joining me today is Rob Romano, our Director of Research. Rob, this is the first of 3 videos as we talk about our investment outlook for 2025. Let's start with the fun stuff. Let's talk about stock markets and corporate earnings. It's been a great year for most equity investors. Can you talk about earnings and what it might look like in 2025?
Yep, it has. Thanks, Paul. So over the past few months, the market's really been focused on the election and, of course, Fed policy. But quietly beneath the surface, corporate earnings have been growing, and they're growing at about 10% this year. Now, much of that growth is coming from technology. So think of spending on semiconductors and software to build out those data centers, which will support the rollout of artificial intelligence. And just to give you an idea of how big that spend is, Microsoft, last quarter, the capital expenditures for just that quarter were almost equal to all of 2019. So as we look to next year, analysts are forecasting earnings to accelerate to 13% year over year. And within that forecast is record operating margins. And when we look at technology, those earnings will decelerate. That rate of growth will decline. Again, that's coming from a high bar, but we do expect other sectors will pick up some of the slack. Now, we do think there are risks to the earnings forecast of 13% year-over-year growth when you consider economic growth is moderating and we're getting more evidence of the job market slowing.
Rob, one of the reasons the market's done well is clearly earnings growth that you've talked about, but valuations have also risen. We're at a relatively high price earnings multiple. Can you talk a little bit about the valuations and the enthusiasm households have for equities right today?
Yeah, those elevated valuations and the lofty earnings expectations I talked about require us to be mindful of some of the risk out there. And valuations do matter. They may not matter in the short term, but they do in the long term. And valuations are a big part of our discipline. So when we look at the S&P 500 index as an example, on a price to earnings basis or price to cash flow, it's trading at the higher end of its valuation range. It's currently around 21, 22 times forward earnings. And when we look at the range over several decades, it's anywhere between 13 and 23. So with the high price earnings ratios, investors should expect lower returns the next couple of years. And in addition to that, on this graph, you can see equity positioning for investors. And there's 3 peaks in this chart. One is currently, one is around 2000, and one around 2020. So this shows somewhat of the euphoric feeling among investors and how they're currently positioned right now.
We know equity weightings are high, but after a great year, that's not totally uncommon. So what are some of the opportunities and potential pitfalls as we look into 2025 for equity investors?
Yeah, I'm going to take a quote from Yogi Berra. He says it's tough to make predictions, especially when talking about the future. So I'm not going to make any predictions about the S&P 500 index. I'll leave that up to the Wall Street strategist. But we do see a few opportunities out there. And again, one is within mid caps. And we acknowledge large caps and how well they've done, and they have tremendous scale, great balance sheets, good cash flow. But we think some of those attributes are already reflected in some of those names. So within mid caps, we think you're getting companies that are growing faster than most of the large caps, and they're less risky than some of those very small cap type companies. Now, when we look to international markets, especially Europe, it's hard for us to get excited. Europe it's more of a manufacturing-based economy. They do export quite a bit to China, and we know China's weak. The unemployment rate is higher than the U.S. It's around 6% currently. And, we've been underweight Europe for quite some time, and we continue that underweight today.
So we tend to be underweight international, period, knowing that some of the great companies in the United States clearly sell outside of our domestic borders. So Rob, thank you very much for your insights, and we look forward to seeing how those ideas play out in 2025. If you like today's video, I encourage you to share that with friends and family. If you do not currently subscribe to the Market Share, you can do so by scanning the QR code at the end of the video. And always, thank you for the opportunity to serve you and your family, and have a great 2025.